Right, welcome to Macro Trader. Gotta apologize for my last video. I was a little upset. And some of the people on Reddit did not take too kindly to me bashing Redditors. Don't know what to tell you. So we're going to continue our EURUSD analysis because there's some developments in the numbers. We're also going to talk about, the New Zealand dollar. And, you know, some people were up in arms with me not... What did I say? Oh, because I said it was a possibility over back here. There was a possible move to the upside on the euro. Oh, you said it was a possible. That's not... Okay, well, anything's only ever possible. But I guess since I didn't show my positions... you know, listen, I don't know what to tell you. Would you like me to hold that baby spoon with the Gerber's baby food for you? Guys, I don't have to tell you my positions. I'm going to show them to you today. But I don't got to do that. I'm not a trading coach. I'm not a guru. That's actually not what this channel is about. Everything in terms of analysis is ancillary. Okay. Primarily macro trader, and you guys got to get this very clear. I mean, primarily macro trader is software. I'm a software engineer. I do data analytics. Okay. Part of what is a bit of teaching, coaching is, well, it's showing you how to use the tool for yourself, so you don't need that Gerber's baby food fed to you by somebody. But let's get to the analysis. We had said that back here we're looking to a upside move on the euro, and that's exactly what we got. So because the euro area economic data had overtaken the US back here. So again, guys, this is leading economic indicators. You get a little view into the future. So as this pushed up, we saw a move on the euro. And since then, I'm going to get a video out because since then, the economic data has once again kind of flipped in favor of the dollar. So since the euro is correlated to the European economy, obviously, we'll kind of get rid of the get rid of the dollar. Okay, so again, we have a downward movement on the fundamentals, and preceding now looks like we're seeing a move back down. So originally my positions were this is just before I closed out the EURUSD position, so I don't actually have that's my newest positions, but I don't actually have a EURUSD position, but I closed it out at 3% on the pair. That would be, this number would be no leverage, so 3%. So again, I warn against over leverage, but if you do say 10 times leverage, okay, so you're looking at 30%. So 334 pips. Okay, on the EURUSD. Close that out, guys. I still have the Australian dollar, New Zealand dollar, and the CAD, the Kiwi CAD both long on the New Zealand dollar. Currently, more recent screenshot, looking at 55 pips, or about 0.52% on the pair, and 280 was a 62 pips currently for the Kiwi CAD. Okay, 3.10%. Stop chasing 10, 15 pips, guys. You can do better with fundamentals. I mean, you can easily catch 3 or more percent on the pair. Now, multiply by that whatever leverage you're using for your account, but it is what it is. So, looking back at the where am I here? You can see tentative regression channel. Probably will fall back in here. If not, go back into this bottom channel if the fundamentals continue to support that. We'll see how the data comes out. But yeah, I closed out at the top here, and we'll keep an eye on the pair. As far as New Zealand dollar, let's go to New Zealand. The economy differentials against the Australian. I really like the technical setup on this one. Okay. So you have a clear range here, and just an absolute disintegration of numbers of the Australian economy relative to the New Zealand economy. So we're looking at this move coming back down all the way here to the possibly 102 level. We'll see. I do hard stops, soft targets, guys. No point in taking a profit way up here when you can have huge trending moves. But I set a hard stop, and when you're trading fundamentals, you got plenty of time to determine when there's a shift in the data. So back here, we have a decline of the Australian data, and again leading, giving you time to position for now what looks like the currency now adjusting according to economic data. The New Zealand CAD was my other open position. Okay, again, guys, Canada economy is getting hammered relatively to other economies. This, we have, as far as my data goes back, 2007, beginning of 2007, well over a decade, we have not seen a differential like this in favor of one economy toward another. You have some retracement, but I think the move on the economic data is strong enough that, I mean, if you're just trading on technicals alone, you really have no choice but to short resistance, buy support. I mean, right? But when do you know? I opened this position back here. I'm not getting rid of it just because it's at this supposed resistance. Because if there's any time when this is now going to retest the highs up here, this is the time. And it's already breaking through. We're already past the peak highs. I was not concerned at all about any of this, quote, resistance holding up. at all. So just a quick video for you guys. We'll end with just a very general economic overview, and that's why New Zealand CAD is holding up so well. And you knew back here in April to May when that actually started going up, it was like one of the only economy going up at the time. It's the data we have to go off of. But the global outlook, Canada getting smashed hard, looking at a -5 standard deviation event. Back here, that would mean that this is likely bottom, but it's going to take some time to recover. All the economies faring pretty poorly right now. But again, we can take advantage of that because cross-currency fluctuations are dependent on the differentials. And that's what macro trader can tell you. So if you were long euro dollar, well, I'm not. I can't tell you what to do. Time for the disclaimer. Trading Forex on high leverage is dangerous. You can lose all your money. So that's the disclaimer. This is not investment advice. This is just real software. All right, guys. See ya.